Could you expand a little bit more on the financial side of things, getting into new European markets, especially in terms of risk management?
Sure. And this is a particular element on which we've been working with EDC for quite a long time. There are several products and services that we've used over the years which have helped us. I would say the first one is direct financing. So EDC can provide direct financing to customers. Simulators are, I would say, large capital assets. So on the civil side of our business, even though airline customers usually have access to banking and to capital market to finance their aircraft, they are also familiar with export credit, and they see EDC as a valuable alternative source of financing. At the same time, most countries have their own export credit agency, so sometimes it's just about making sure that we're on a level playing field with our competitors. On the risk side, I would highlight two products. First off, we have receivable insurance. So in a lot of export markets, you sort of lose some control over when you're going to get paid by your local customers, and sometimes even if you're going to get paid. It's a little bit harder to assess creditworthiness of a customer in a foreign market, and you might not be familiar with the recourses that you have to recover amounts that are not paid. EDC has a program provides accounts receivable insurance, which has helped us de-risk that aspect of our business. And I would say particularly for smaller companies, small or medium-sized company, a common financing tool is using accounts receivable as collateral for working capital financing. So the knock-on effect of having that security is really valuable. The second tool that we use for risk mitigation is account performance security guarantee. So in government contracting or large private companies, there is often a requirement to post performance bonds or advance payment guarantees. And EDC is a program which essentially provides a backstop for the letter credits that you would be putting up. So more liquidity for the business, funds that are not tied up in collateral requirements. It's easier just in general. And I think to touch on your point of risk management, regardless of the size of the company, whether large corporates or small and medium-sized company, to me it's really all about the risk management. So the tools that I've mentioned, for example, it might seem unnecessary when times are good and credit is available and customer pays and everything is going well, but when the market is a little bit more turbulent and things turn, you'll be glad to have someone on your side.